Hello, this is Mike Wade, Chief Options Strategist for Tom Gentile, and welcome to this TTR video featuring Tom's tools and yours truly. Stock and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose. Remember, I'm not giving you any kind of buy or sell recommendations for a particular stock or options. I don't give advice. Please don't construe anything as advice in this video. All prices are in US dollars unless noted otherwise, and please read the balance of the disclaimer at your discretion. So in the last video, I talked about using butterflies in a sideways environment, and I really demonstrated how cool they are in a sideways environment, but they get even better when you start to think about using them in a directional fashion. So here's an example of what I'm talking about. You can see here I have a butterfly on the screen here, but notice that I've placed the butterfly higher than the current price of the stock. I'm expecting the stock to actually rise, and perhaps my target price would be there. And I can use a butterfly in this fashion to reduce my cost and increase my chance of making money. So this video is about directional butterflies, using them to reduce risk and to increase probability of profit. We're going to be getting into Tom's Butterfly Finder. I'm going to talk about the directional butterfly construction, finding great directional butterflies with the scanner, and a bit about entering and exiting the trade. So let's get into directional butterfly construction. So to get started, let's set the table. What kind of stocks are we interested in? Well, first off, we're going to be using directional butterflies only for bullish opportunities. That has to do with implied volatility and the way it works in bullish stocks versus bearish stocks. So here we go. We got a stock here on Roku. This was back on August the 8th. Roku came out with earnings the prior day that just blew the doors off. They raised expectations going forward. The analysts really loved the stock. It was off to the races. And our expectation here was that the stock was going to run up. In fact, we thought it might go up all the way up here to $50. So what could we do? We could buy a call option. We could sell a put spread underneath the price of the stock. We could even do a long call spread or a bull call spread. And we could also do a butterfly. We could actually reduce the cost to just a little bit. Look how cheap this thing is. And place a butterfly just like a catcher's mitt in baseball up where we expect the stock to go. Reducing our risk to just this amount here and potentially giving ourselves this much profit. A tremendous risk to reward ratio. One of the things to notice about these out of the money butterflies is that the stock does not need to get into the profit zone up here that I talked about last time between these break evens. You actually make money as the stock goes up immediately. So we're making money on these colored lines here. Expiration line, we're not going to be in this trade on expiration. We're going to be in the trade during the life of these colored lines here. So immediately the stock goes up to, let's say, 133, and we're already doubling our money at that point. So we get a fast double. This double is going to be better than a long call option. So that's one of the benefits. The other is that we can make a lot more money up here than we could with a long call option, provided the stock floats around in the apex of this particular butterfly. So here's the construction, just like a butterfly. It is a butterfly. It's the same one we did in the last video. We're going to buy one upper strike call. We're going to sell two middle strike calls, and we're going to buy one lower strike call. So we're buying one 140 call, selling two 150 calls, buying one 160 call. Notice that this short strike, which corresponds to that witch's point, is right at our target price. So position your short option right about where you're expecting the stock might end up. Let's dive into the tools and take a look. Let me show you how to find these awesome trades. First off, let's go back to the stock chart I just mentioned. This is Roku. We had a big volume spike. Look at the volume on this run up. Great news, great earnings news, and the stock propelled up. The forecast from here was that the stock would just keep on going, which it ended up doing. So what you want to do here is with a stock like this, you can consider using these out of the money call butterflies to reduce your risk greatly and to increase your probability of profit and the amount of profit you can make as well. Let's hop into Tom's tools, and we're going to go right into single strategy, searcher, single strategies, butterfly. We are just going to use one of the different searchers. We're going to use out of the money call butterflies. Don't bother with out of the money put butterflies. They don't work as well to the downside. Just use out of the money call butterflies for bullish opportunities. Now I've got the wizard criteria shown by clicking show. and I've got to change a couple of things to give myself a really far out of the money and wide, fat, high probability butterfly. So we're going to change 4 parameters. Right here under sell option strike search distance from stock close, I want you to put a 10 here for minimum and then a 30 for maximum. Also for buy option strike difference from sell, we want our butterflies to be at least 10 points wide between strikes, as high as 30. We want them at least 10 points away and maybe as far as 30 points away. So these are going to be out of the money, they're going to be wide, they're going to be cheap. Place the symbol for the stock that you're interested in. We're interested in Roku, and I'm going to hit my search button. And you're going to get the same results we got last time, except the butterflies are going to be centered further out of the money. Here's the current price of Roku when I ran this scan. Again, I'm back testing on 8/8. Roku was trading at 122, and the short strike right here in the middle, 145, was 23 points out of the money. So it's way out of the money. All right, now one of the things you'll notice on these way out of the money butterflies is that they really offer some pretty phenomenal return on investment. This one is offering 2,339% return on investment for your $41 of risk. You spend 41 cents, you have a possibility of making $9.59 per contract. All right, so I like open interest, so my eyes are going to be moving to these with high open interest. This one's not bad. It's a bit further out of the money than I want. This is the one I want. This is on Roku with the 140, 150, 160 butterfly. This one expires in 43 days, giving us plenty of time for the stock to make its run up from 122 to 150. It's going to cost me 85 cents, offering a potential 1,076% return on investment. That's potential profit. Let's take a look at the risk graph. Notice here the numbers I just showed you. 85 cents is our entry debit times 100 shares. Control is $85, of course, for a potential profit of $915. That's 1,076% potential return on investment. You're not going to make that, to be honest with you, because the stock would have to end up right here at the witch's hat at expiration. That's just not likely to happen. But there is a chance to double our money very quickly on this one, especially given we've reduced our cost of entry to $85. Notice here, if I was to buy a 140 call, it would cost me $3.30. So that's if I just went with a long call. This butterfly costing $85 is roughly 1/4 of the cost of buying the call. So there's our reduced risk. Here's our reduced potential return on investment. Our probability in the trade is really good because even if the stock doesn't make it up here to the body of the butterfly, notice that right away as the stock runs up, we'll start making money immediately and almost doubling our money pretty much right up here in this area here. All right, so we're making money immediately if the stock actually starts to run up. So let's take a look at what happened with the stock. I'll take us forward to the 26th, which was 18 days later. We had a double in this trade. Look what happened to the stock. It actually ran up as expected, had a bit of a volatile time, which is normal, and then set an all-time high here with really nice profit. So already the stock was in the body of the butterfly and still forecasted to go to 150. So there's plenty of profit left. And now we're in a trade that's making money if the stock goes sideways or up. So the probability has just increased dramatically. Going forward to a few more days to the 29th, you can see here that the stock hit our profit target of 150. This would be a good place to get out. You could also have gotten out here selling half this position off at a double and then having a risk-free trade. A risk-free trade, you'd have a guaranteed profit trade. Of course, you'd have to have more than one butterfly. You might do a 2-4-2 or a 3-6-3 or a 5-10-5 in order to sell off some of the butterfly and let the rest of it run. All right, so that's the idea. This would have been a great place to exit. We're right at our profit target of 150, just shy of it, touched 150 during intraday. I would chalk this up for a very, very good out-of-the-money butterfly. If you wanted to continue to play with this thing, I'd certainly take off half at this point and play with this and allow the time to work for us and adding more profit to the trade. So in summary, to find these out-of-the-money butterflies, first off, find a stock that you think is going to run up big. And then once you have that, pop into the butterfly finder under Tom Searchers and select out of the money call butterflies, click the show button, and then fill out the form just like I showed you. Under sell option, strike search distance from stock close, make it 10 points minimum and 30 maximum. And then under buy option, strike difference from sell, make that also 10 and 30 for minimum and maximum. Once you've done that, plug in your stock symbol. In our case, it was Roku. Click your search button and then move through the results in the same way that I just showed you. All right, well, welcome to the world of out of the money butterflies. Last video was at the money butterflies, sideways butterflies. Butterflies are awesome. They take a little extra to understand, but once you do, they'll become one of your favorite strategies. All right, thanks for watching this video, and I will see you next time.